So, guys, okay, guys. So if I take my thing from this boss, this is our discount. We are buying from this boss. We are buying from discount. So so as the market was buying, what changed? Something happened. So the market better here. We use one of the buy momentum. The buy momentum fade here. The buy momentum fade here. So this is so this low. All these low now are change of track. All these lows now are choke. They are all change of track. Remember, this is 4 hour time frame. Oh, this is how to get 1 hour time frame now. Um, this is the thing, oh. So if you go to 1 hour time frame now, you can clearly see. Okay. Um. Thank you very much, my brother. So I'm going to just brief this thing. I want to make it very simple like this. Now I want to make it very simple for everybody, very simple. So we don't have to
The former this thing that we did is still out there. The former video that we did is still out there. So I'm just going to explain this one briefly now. So I hope you guys will understand it enough this time. So I don't want to take any loss on gold right now. I don't want to take any loss on gold. So all the analysis I'm going to do now is going to be A plus. It's going to be A plus. So
A plus.
I have to be very careful. So let's go. Let's dig this gold now. So this is 4 hours time frame. I'll start afresh. This is 4 hours time frame. In 4 hours time frame, what do you want to look out for? You have to look out for a break of structure, right? A break of structure. So I'm going to find a break of structure right now. This is a break of structure, right? Hope you guys can hear me. Can okay. So this is a clear break of structure right now. So I'm going to mark it out. Break of structure. Remember, we buy from discount. Everything that we do here is discount. All our buy entries are from the discount. Once market gets to discount, we look out for buying opportunities. So this is a break of structure. I want to see this market trend low. We want to see a pullback to this our discount. Okay, yes, brother, I can hear you. GPN. I didn't see my brother. So this was the previous low. This was the break of structure that made this market pull down to our 50% level. So if I take my Fibonacci now from this high to this low, I take it from this higher low to this high to this high. So here is our 50% discount zone. Here's our discount zone. So after the market get to our discount zone, what happened? The market changed character. So as soon as the market change character, what do you look out for? You look out for the market to swing, to pull back again. You see, pull back again, and the market pull back to 50% and make another movement. So here is our 50% again. So so this is the market structure now. This market creates a break of structure. After the break of structure, it pulls back to 50% and you execute your entry. So then before the market when the market pull back, before the market buy to do change of character, you shouldn't take out any low. So let's look at this now. This is a break of structure, and this is another break of structure, right? I think I have to write all this stuff down. I have to write all this stuff down. Break of structure. So this is a break of structure, break of structure. It's a break of structure, and this is a change of character. This is a change of character. I said this on the first video. So I'm just starting things afresh so that if you miss that one, if you miss how I analyze it, then you don't have to miss it again now. So this is a change of character. Since this market was buying, did it take out any low? All these are other blocks. All these low are other blocks. Market couldn't take out any of this low because it's a buying market. So you don't expect market to take out this low. So that's why market take out this low because all these low are the low. This break of structure is protected by this low. This break of structure is protected by this low. The only time market should come down and take out all this low that is being protected is when it change character. It's when it goes above this one. So when this market swing low and make that movement to break this structure, this low is protected. So the market shouldn't go below here. That's why if you take your fee from here, from this low to this high, sorry, from this low to this high, you can see where the market gets in before the movement. You can see market gets into where 50% before that movement that break this structure. So all these low are valid low, protected low. All these low are protected. So since the lows are protected, market is not supposed to go below it before it goes above here. So that's what I'm trying to explain to you guys now. So what happened after the market pulls back to here, 50% level, and start buying? It's not supposed to take out any protected low. So one of these lows was taken out. So let's mark out this one. Change of character. Right. Change of character. We have another break of structure here. Right. Break of structure. Break of structure. So remember here, remember that this low it was protected because there is a break of structure, and this low was still protected because there is a break of structure. So look at there is a difference between this side and this side. What happened here and here? If you look where, you will see that one of this low was taken out. One of this low was taken out, and the market couldn't break above this high before it take out that low. Look at this structure very well. You see, the market was buying from here, breakout, swing low, and breakout, and the breakout that caused this change of character. So after the market do change of character, that's when it's possible to pull back. But when market couldn't break this structure, couldn't do break of structure here, let me write this break of structure. When the market couldn't break this structure here and take out any protected low, the market has changed character. See, change of character. So when this change of character happen, what do you expect? Here now has turned towards a protected high, because here was the supply that caused this change of character. Here was the higher, the swing high that caused this change of character. So when this thing happen, what do? You mark out your here as your change of character. So this high now is protected. My price shouldn't go above this high. Don't know if you understand me. So when this thing happen, now what will you do? You will take a Fibonacci and drag this market from this swing high again to this swing low. So here was the 50%. So here was the 50%, and there was a fair value gap here. I hope you guys are with me. There was a fair value gap here. So now I will not use this 50% again because I have found something that market will respect. Don't know if you get me, which is this fair value gap. So I will not use this 50% again. I'll just use this fair value gap. So we will zoom in here now. We will zoom in here now. After this change of character, we will now wait for this price to go and fill this fair value gap. So after my price fill this fair value gap, what do you want to see? You want to see something like this: change of character, break of structure, and a sell that will cause change of character and a pullback for the supply. So all this you are seeing right here, you still want to see it inside here. Don't know if you understand me. As so this is the swing low. Let me update you guys on the group. Something with that one here. So this change of pattern, as this market was buying from here, you want this market to go up and fill this fair value gap before you do anything. So once the market gets to this fair value gap, you want to look out for a change of character. Once you see a change of character, what will you do? You take your Fibonacci and take this and take your Fibonacci from that high to the low. So the 50% level is where you are going to look out for your selling opportunities. Or if you see a fair value gap, you don't use the 50% anymore. You just use the fair value gap instead of 50%. So we'll zoom in here now. Mm. So I'm going to zoom in here now. I'm going to zoom in here now. I'm going to zoom here now. We will use the 15-minute time frame, right? Let's go to 30-minute time frame first. So this is inside here now with a 15-minute time frame. But now I'm using that 30-minute time frame because I will see clear view. Let's use 1 hour. Let's use 1 hour. So in the 1 hour time frame now, you can clearly see break of structures. So if you look at all these things now, you see that all the low after this break of structure, the low is protected. You expect to buy when the market swing low from the discount. You expect to buy from the discount. So as the market they swing high, they swing low, you should be buying from the lows. See the market do change of character. They show. Check my telegram. So okay guys, I think this has been disconnected. Can you guys see my screen now? Can you see my screen now? If you can see my screen, you let me know. If you can see my screen, let me know. Okay. Is he back now? Is he back now? Can you see my screen now? Can you see my screen now? Okay. Thank you. So now, so yes, okay. So now let me go back. So on the 4 hours time frame now, you can clearly see a break of structure. You can see break of structure all these places. This is a break of structure, and change of character. So all these low are protected. All these low are protected. All these break of structure. Once market break structure, the low is protected. Once market break structure, the low is protected. So market shouldn't go below this protected low. So after this break of structure, the market swing low and to 50%. This is a 50% level and break another structure. Then if after this break of structure, what happened? He went up and changed character. You can see he went up and changed character. So after that, what happened? The market swing low to the 50% level. So here's the demand zone. So once the market gets to the demand zone, you expect market to buy to change character. So the market buy to change this character from here, swing low again, buy to change to do cause break of structure, then it swing low again, buy to cause another break of structure. But price couldn't take out this higher break of structure. Was price couldn't take out this higher break of structure and swing low and take out protected low, that means that this price is not strong again for buying. The momentum has changed from the buy to the sell. Don't know if you understand me. So when this break of structure when market did this break of structure, it swing low and break another structure. But then it couldn't break this overall structure. All these are internal break of structure. The internal break of structure couldn't break the overall market trend. It couldn't break this high. So as he couldn't break this high, he came down and do a change of character here. That means that price wants to go down. Price wants to sell to take out all these low because this is the low that start this break of structure. This is the low that cause all this. This is the low that start all this trend. From here to here, the low is here. So from here to here now, here is the low. So when market couldn't buy to do this break of structure, this overall break of structure and change character, that means price wants to come down to take out this low. So now we have a change of character here. So if looking at this now from this high now to this low now, there's a fair value gap here. So this fair value gap here now is where you are supposed to sell this market. You are supposed to sell this market now from this fair value gap. So after this change of character, you will take a Fibonacci from this high, from the week, oh, not the body, from the week of that high to this low. You can see the 50% is inside here, the 50% is inside here, and there's a fair value gap here. So you won't use the 50% inside here, you will use the fair value gap because market will not just leave fair value gap like that and start going. You need to complete all those things. All those things are imbalance in the market. So market need to feed the fair value gap before the major trend. So now we want to sell this market from here now, from this fair value gap now to take out this low because it has changed character, which we take out this low. Don't know if you understand me. So now we are looking in to sell from here now to here. See back. We are looking in to sell from here now to here. Then you know that we sell from discount. We don't sell from premium, we sell from discount. We don't sell from premium, we sell from discount. If market couldn't get to discount, don't take your sell. If market has not get to your discount yet, don't take a sell or don't take a buy. If you are buying, you should buy from discount. If you are selling, you should sell from discount. So we are going to zoom in here now on the 1 hour time frame. So on the 1 hour time frame now, you can see break of structures, right? On the 1 hour time frame now, you can see break of structure here, 1, 2, 3, and 4. So all these are clear break of structure. If you look at this thing very well, let me zoom it. If you look at this thing very well, you can see the lows. Here was the low, first low, second low, right? You can see the price didn't get to all those low because these lows are protected. The low break of structure. So that means this low is protected. Price cannot go below that place. Even price cannot reach that low with a week. Don't know if you understand me. Price, yes, my brother, we sell and buy from discount. If market hasn't get to discount yet, we are not going to do anything. We buy and sell from discount. Discount is our entries. Discount are our demand zones. Anywhere on discount is where we should look out for our confirmation for entries. So all these are break of structure. All these are break of structure. Let me mark it. Or sometimes if market have clear structure, you make like crazy profits. But if market don't have a good structure, that's when you're likely to chop loss. So that's why they say some weeks, some days you're not even meant to trade. Some days you're not meant to trade. Some days the market don't have a good structure. You just allow those days to go to the market form a good structure. So after this break of structure, the swing low is this one now. So here is the low. So what happened here? The market change character. You can see change of character. The market change character. Don't know if you see this. So the market change character. So when market change character, and let's see now where this market changes character. Now let's go to 4 hours again. Let's see where this market change character. You can see the market has filled this fair value gap. You can see the market has filled this fair value gap. Look, the market has filled this fair value gap. After market filled this fair value gap, what happened? It changed its character. See, it changes character. So after the fair value gap has been completed, the market changed character. So here's the fair value gap now that has been completed. So since the fair value gap has been completed, what do you want to look out for? A change of character. So the market change character. So when market change character, what do you do then? You look out for selling opportunities. Okay, I will show you how you place and buy from the discount. I will show you, just hold on. So when market change character, or when market confirms buy, you want to sell from change of character and you want to buy from change of character. If market hasn't got to change of character, you don't do anything. You don't enter trade from change of character. You don't enter trade from premium. So all these are premium levels. All these are premium levels. So we'll take our fib now from this high to this low and see if this price has got to our discount zone. So let's take this Fibonacci now from this high now. See, this is the swing high from this high now to this low. I will use this low. Can you see something? See that price has not got to the 50% level. This 50% level now is here. Like, see where the level is. It's here, like exactly here. The price just got to that place and start coming down, and it will still go up again. So the market hasn't got to our 50% discount zone. The market hasn't got to our 50% discount zone. It's almost on the 50% discount zone, but it has not gotten to that point. So if looking at this 50% discount zone now, you can see a clear order block from here. You can see another block from here. Then you can still see a fair value gap here. Don't know if you can see this. See a fair value gap here. So if you see this, what will you do? You will remove the 50% discount zone and use the fair value gap, because market will not just leave fair value gap like that. It's not fair. You say, if you listen and you don't say it's not fair. So we are going to take a sell on this fair value gap instead of this 50%, this other block. Since there is a fair value gap here, we'll take our sell from this fair value gap. So remember that we are selling from the discount. If you take this fib to this high and this low, here is our 50%. Inside this box, I made it very simple and clear so you guys will see it well. So inside this box now is our 50% level. So we want to sell from when market gets to this 50% level. But then there is a fair value gap here. So we are taking ourselves from this fair value gap on the discount zone. So we are taking ourselves from the fair value gap on the discount zone. So this here is our fair value gap and on our discount zone. So we want to zoom inside here now and catch a buy that will take this market up to this discount zone. So I'll go to 30-minute time frame right now. Or I'll go to 15-minute time frame so you can see a clear view. 30-minute time frame. Let's go to 15-minute time frame now. See, we don't get where we go sell from now. We don't get where we go sell from. So now we are focused on buying it to that place, right? So we go to 15-minute time frame. On the 15-minute time frame now, you can see break of structures, transfer resistance. So I'll mark out the break of structures that I see here. This is a break of structure. One. Look, may you observe this thing well. Look, may you see and well now. So this is the previous break of structure. See back. This is the previous structure, and all these are just weak. So here is the low. All these places are lows. There's nobody that is except this one now. This body now will come down and I'm come up. Now cause another break of structure. So let's mark this thing now from this place now. So see the body will break this structure again now. This body now break structure now. So this break of structure now from here to here now. Where is the high? That's what you want to spot out. Where is the high of that break of structure? This break of structure now, where is the high? This one now, with this small one over here now. See the high here now. The high is this small one over here now. See, and the high be this one now. So this one now will break this structure now. Where is the high? The high is this week right here. The high is this week right here. Because after this break of structure, the market swing high again, right? You don't even reach this one safe. You know, see them. You don't reach this one. You know, reach them because it's protected high. So market not supposed to reach them. Now change your character with that. So if market go above it, you don't change character to buy. So what happened after market break this structure? It can swing high, swing low, and break another structure. Hope you guys can see this clearly. So the market swing high to break this structure. So after this break of structure, what will you do? You mark your high again, which is here. See, look, oh, which is here. See, now here this market do change of character. Let me remove this one. So you see what I'm talking about? This is the swing high. The market has changed character from here. So this is a change of character. Change of character. Clear change of character. So if market change character, what will you do? You wait for market to swing low, right? To pull back and you buy from discount. This person will ask, how do you actually place to buy or sell in a discount? This is what I'm just showing you this now. This let me just use this opportunity and bring this to you. So this market break this structure from here. From here, this is the swing high, the change of character. So what do you want to do? You want to use your Fibonacci. Everybody knows how to use Fibonacci. If you don't know how to use Fibonacci, I don't need to teach you this one. You should have to go on YouTube or even TikTok and search or even figure out how to use Fibonacci. But I'll still show you guys later. So I will take my Fibonacci now from this low to this high after this change of character. So the 50% level is my discount. So I want to buy from all those places. So if I put it from the low to the high, I have to mark out my 50% level. Then I will find a reason why the market will go below my 50% level. If it's a sell, I will find reason why it will go above it. If it's a buy, I will find reason why it will go below it. So this one is reason why you go below the 50%. So let's take this Fibonacci now from this high now. From this low, this is low, they swing low to this high now. See our 50%, right? This is our 50%, right? So tell me, somebody on the comment, I beg. Let somebody tell me the reason why this market now go past this 50%. This is our 50%. This is where we're supposed to buy it. But I've seen so many reasons from this low to this. I have seen so many reasons why this market will go below here. Let somebody tell me, please, I beg. Somebody should tell me. So somebody should tell me why this market now. Please, somebody should tell me why this market will go below here. Tell me the reason. Tell me what you see on this chart now. Tell me what you see. Tell me the reason why you think this market now will go below here. That's what you should look out for. Once you use your Fibonacci and find out the discount zone, you want to look out for a reason why the market will go below it. Since we are on a buy, we want to buy from that point. So you want to find a reason why the market will go below it. Can somebody just give me a reason why the market will go below it? Any idea? I'm waiting, oh guys. I'm waiting. Can someone tell me the reason why this market will go below this 50% discount zone? Somebody should tell me, please. Somebody should tell me. I've not heard anything from you guys, so okay, since I've not heard anything from you guys, I will continue. So, looking at this chart now, the reason why this market will go below this 50% level is number one, there's a fair value gap here, a Fed pullback fair value gap that is here. See, clear fair value gap that is here, right? And there is what again? There is an endorsement here too. See, thank you. Fair value gap, fair value gap. Thank you. Fair value gap. So there is a clear fair value gap here, and there is an endorsement here. You know that this all these places now, this endorsement now and this fair value gap now, this is our 50%. So we want to look out for buying opportunity from this 50% to this low. I don't know if you understand. So we want to look out for buying opportunities from this 50% discount. But then there is an inducement here and there is a fair value gap here. So we want to, instead of us to use that 50% discount zone which is here, we will now use the fair value gap on the discount zone. I don't know if you understand. We are still buying from the discount zone, but we are not buying from the 50%. Exactly, we're not buying exactly from the 50%. We are buying from the fair value gap on the discount zone. So this trade right now, I did analysis on this market, on this pair, like on this gold. So let me just check my trade. I don't know. Okay, it's coming. So as this market change character from here, let me remove this one. Here is our change of character. So as this market change character from here, you will take your Fibonacci from this low to this high. Here is our 50% discount zone, and there is an inducement here, and there is a fair value gap here. So you want to buy from the 50% discounts. It's either you buy from the fair value gap or from the inducement. But how do we know if this market has confirmed? You know, sometimes the market will just come to this 50% and take a leave. Then you now will say you're going to wait for this fair value gap now. You will miss the trade. So this is where like this is where you need to exercise patience and believe on your setup. So you don't chase market, you don't chase trade. So if you do it finish and price didn't tap you in, you allow it to go. I don't know if you understand my point. So what I want now from this chart now is I want this trade now. I want this market to start swinging high and swinging low. I sold here, went up and take and sweeping out. So I want this market to start doing something like this. I want it to create higher lows and higher high. So as it's selling now and get to this level, I want the market to go up and take the last high. See, the high that caused the break of structure, the swing low that feeds this value gap, the high. See, but the swing low that feeds this value gap, the high. I will use the high as my confirmation. So once price gets to that fair value gap, I want to see I want to see a strong bullish momentum. Then after this, I want to see price come down again and take a strong buy momentum. So I will use here as my confirmation because the low was taken out. But sometimes market doesn't create all this kind of movement. Sometimes market doesn't create all this kind of movement. So you can't just expect the price to be like this. So you use what you see. You know, anything that you see on the chart, that's what you will use. So we don't know how the price will respect this level. So we will use what we see. So at this point, I just want to watch this market. I just want to watch it. I'll put an alert maybe on the 50% and on the fair value gap. I'll put two alerts on the 50% and on the fair value gap. So once price get to that 50% level, I want to see a strong demand. Like I want to see a strong demand, or I'll use price action. Candle that went down, this red candle that went down, the market went up and remove that candle. So I want to see it's either I see this kind of a thing here or the former one that I used. I want to see it anywhere from here to here. Yes, there's a good fair value gap there. But you know, sometimes I don't respect fair value gap. Sometimes market will just come there and take a leave after it has done everything that it wants to do. So at this moment now, you see this market that's coming down now. I'm not going to miss this trade. Though. This trade that you're seeing now, I'm not, this is a good setup, like a quality one. Remember, we saw this market from here. We saw this market from here. We sold here. You know, remember this is the change of rata. So I wanted to sell from this. All these are endorsements. From here, all these are the endorsement because there are so many stop losses here. So there's an here is an endorsement. So I sold this market from here. I sold from here this morning. Sold from here this morning. We sold from here this morning, just this morning. What happened? We sold from here this morning, and I was targeting this low. See, bar. I was targeting this low for a double bottom. But what happened? After price get to ratio 2, boom. So price reverse, hit our stop loss. So when this thing happened, see when price reverse and hit our stop loss, that's when I know that price market the market has changed character. Instead of they said market has changed character to uptrend. To do what? To complete that 50% discount zone that fade. So when this thing happened, I was not shocked because I already know what the market want to do. So I was not shocked. So that's one of the things that you should need to consider whenever you can't see your screen. My screen is showing now. Can you see my screen now? Let me come again. Can you see my screen now? Can you see my screen now? Can you see my screen? Let me know. Okay. Where is this? Hold on, guys. So, okay, guys. So I want this price. I want this price to come to here. I wish I had more times. Would have trade life. So I want to see this price come down to this our demand zone. So when price reach this demand zone, I will show you guys something. I will show you guys how I used to confirm once price gets to our demand zone. I will show you guys. But this me, oh, this me. I saw this market here. I sold it here. So it here. I was forgetting here. Okay, just boom. Okay, my stop loss. Very, very powerful. No. So this market here. Just boom, it my stop loss. So this was our around ratio 7. Ah, let's see, okay, stop loss. So this set that I took this afternoon, it was around there on this first pullback. I sold on this first pullback. The market went up and hit my stop loss. But now what's going on? The market is selling. So sometimes it's not about how you it's not about your analysis, it's about yourself. I didn't have enough patience to wait for this market to show me a good structure for before I enter a sell. So I was supposed to enter a sell now. This is now I was supposed to enter a sell now on this pair. Let me show you guys. So I was supposed to enter a sell now because we can see clear break of structure here now. Here is going to be our change of character. change of character. See back, break of structure and change of character. Yes, that's the that's part of the game. That's why I'm saying that you know one stop loss shouldn't. That's why I'm saying that you should have a trading plan. I'll still let you know. I'll still update you guys on how to have a good trading plan. That's why I say that one stop loss shouldn't determine your loss. My alert has triggered. My TP would have hit now. As you mean say that means that trade now went to my favor. Now my TP I would have not just splash up and hit my stop loss. That's why I'm saying that's why I say one stop loss shouldn't determine your loss. Even five loss shouldn't determine your loss. Because sometimes market could be crazy. Nobody they control the market, You just try your best to, catch the move. So you can do whatever you want to do at the end of the day. So this is the right time to enter this market. Not be now, not be like now, but in case this movement now we'll take this trade. So I want to see the market change character from here now. Let's see if price can go below here. So once this price closes here with the body, so we'll take our Fibonacci now from this high to this low. Don't know the place that you will get before you start going up. So if you get to here, maybe if you get to this here or even here or here, if it gets to here and start going up again, so we'll sell it from here. So if you look at this place now from here to here now, there is no fair value gap. There is no fair value gap anywhere now, right? So you take the 50% because there is no fair value gap above the 50%. So you just take yourself from here. So this is how I catch all those moves. And there's another block here. One, two. So and here now you call here what an inducement. Here will be your inducement. So that's if price goes below here and start buying. If price close here now with a body, without getting to this zone or without reaching where we want to buy it from. For example, let me show you guys. For example, you just get to here and start going up. That means we don't see bread with that. We'll just take a set from here. From here. See bar? So we'll just take a set from here and put our stop loss on this high. So I used to use 55 pips. Sometimes I used to use 60 pips. I like using 60 pips. So this is 60 pips stop loss. 60 pips stop loss. Then I'll target here. Oh shit. Then I'll just target here. Just target here. This like ratio 3. Remember I used to do I don't do below ratio 3 and I don't do more than ratio 4. I don't care how if once market don't reach ratio 4, I don't close my profit. Or I'll just put break even at ratio 3. If you want to go back, you don't hit my break even on ratio 3. There's no problem with that. So if I don't do past my power, I do what I know I can do. I don't do past ratio 3, ratio 4. I don't do past ratio 4 in fact. Unless I so much believe on that trade, I'll just do ratio 5, 6. But then I must have a break even. Today, why we end up losing this morning was because I didn't put break even. I was running on 600 profit. My stop loss I was running on 780. My stop loss was 400. I used 400 as my stop loss on all my trade. I used $400 stop loss. So once I see ratio 2, I put break even. I put my stop loss on my entry. So that in case the price want to reverse, you shouldn't take me out. You should take me out with maybe a little bit of profit. At least my capital will still there. That's the only way to stay on the track because without break even, so many trades will disappoint you. If you see trade we don't almost reach your TP, you go pull back. So to avoid all those kind of embarrassments, you just have to use break even all the time. So this is what I want to see on this chart now. This is what I want to see on this chart now. So once it gets to here, still going. So this thread is really paying me. This thread really paying me. Like, why? Why some of this thread depend me? They say, like, I dedicated my time and do this. Like, I know that this will play out, and I know how it's going to go. But then at the end of the day, the thing will hit your stop loss. Then I start going to your favor. Like they piss me off. Like they really piss me off. But you can't do anything now. You can't really do anything because that's just it's just part of the thing. Just part of the game. So you have to delete this alarm. So this is what I want to see on this chart. So I'll take a long from here. Sorry guys. So here is my protected low. Here is my protected low. So my stop loss should be below here. It's how many? 9,000, 9 pips, right? Is it 9 pips I'm saying? It's like 9 pips. The risk to reward is very big, so I don't mind doing like this. So this is what I want to see on this chart. This is what I want to see. So this binance should hold on tomorrow or midnight. This should arrive midnight or tomorrow. So tomorrow I want to take 3 trades tomorrow. Like this week I already actually take a nice setup like this week. This week is just boring because since this week this market has been very very bad. The trade all this since Monday, Tuesday, Wednesday, I think everything has just happened here. There is no clean movement. The market has not made a clean movement. It has been ranging for the past 3 days now. I've not been on the chart like before. I've not really made good money this week. I made money on Monday, right? I made money on Monday, or was it on Tuesday? Then I had one I had one profit and two loss. Had one profit today. I took a two loss today. One break even and one stop loss. This had me on a clean stop loss. Like I lost below 400, but the market just spike up. This one, I closed it. I closed half of the profit. I closed half of the loss. I was risking 400 as the market went up. Nearly my stop loss and came down, so I had to close it because I've seen that the price don't want to respect that price anymore. The market wants to change for that, so I had to close it on half of my loss. So this is what we want to see now. We want to see this thing now. So just look at this thing very well. Look at this thing very well. This is what I want to see on this chart. Like, this is what I want this pair to do before I take a sell. So once you take out this low, once you do change of pattern here, I want you to swing at the 50% level. We take a clean sell. This one not do. We take a clean sell and it will sell. Once this thing happen and get to this level, it will sell 1,000,000%. Like I don't even have to like 1,000,000% sure. But we know say all the red all treat all the setup like it's an A plus setup. Treat all the setup at the same side, at the same like at the same treat all the setup the way you treat maybe bad one or good one. So they are all the same. You can't guarantee the movement, but based on what you do and what you have been doing and your strategy and everything, you know where it's going to. So you have to risk the same risk. Have a good risk appetite. Risk the same amount of money you want to risk. Same amount of money you want to risk. So I want to show you guys now a diagram on how to use that Fibonacci very well. I want to show you guys a diagram how to use that Fibonacci very well. 1,000 breaks structure here. Maybe 10 minutes time frame. Break. 10 minutes. Still going chat. This SEPME, this SEPME, SEPME, boy. It's alright. What can I say? What can I say? So, guys, I want to show you guys how to use this Fibonacci very well now. Stay with me, please. So, this is how to use this Fibonacci very well now. I'll show you guys. So I want to have a good, I want to have a diagram here now. The market is still dumping, still dumping. So let me show you guys something now. Let me stop here. Let me take this, let me take this here. So this diagram now, this is how to use this Fibonacci. This is a change of character, right? So this is a change of character. So this is a change of pattern. This diagram I just draw here now. This is a change of character on this diagram now. This is a change of character. So what do you want to do on this diagram now? You want to take a Fibonacci from this low to the high, right? So you want to buy this market now from here. So all these are your demand zone. All these are your demand zone. See ba? All these are your demand zone. If the price come down to here, like this, and break out, this is not a break of structure. So this is not a break of structure. I hope you guys can see me. So this is not a break of structure. This is not a break of structure because price didn't get down. Price didn't get to discount zone. This market, this forex, they designed this thing they designed this thing like they made it the way the system is. If you buy from premium, price will haunt you. Like the way they made the system, they made it so obvious that if you buy from the premium, so this up now is premium. All these places are premium. You buy high. You don't buy high. You buy low. Don't know if you understand me. You don't buy high. You buy low. So if price get to this level and you buy from this level, the market will still come down and haunt you. It will still come down and haunt you. See, so here is an endorsement because it's a fair pullback. The pullback is not good, was not good. It failed. It failed because the price didn't get to 50% discount zone. If price didn't get to 50% discount zone, the market cannot buy. So look at this thing here now. I hope you can see this thing. I hope you can see this thing. This is an endorsement. Let me write it down. Endorsement. Endorsement. See, this is an endorsement. This is not a break of structure. This is not a break of structure. Oh, so look at it. That is not a break of structure. That is not a break of structure. This thing is not a break of structure. This thing that I'm marking here is not a break of structure. This is an endorsement. It's a Fed pullback. This is a Fed pullback, so it's not a break of structure. It's an endorsement. So the same thing happened here now. Look. See, endorsement. This is not a break of structure. This is not a break of structure. Not a break of structure. It's not a break of structure. So I'll just make it red. So this is not a break of structure. This is an endorsement. This is not a break of structure. This is not a break of structure. This is not a break. No, don't forget to. This is not a break of structure. This is an endorsement because after price break this structure, it needs to pull back to 50% before it stays valid. But if you use your fee from this high, from this low to this high, you can see where the price get to. You didn't get to 50%, so it's an endorsement. It's an inducement. It's not a break of structure. Like it's not a valid. Some people now go don't buy this market from here now, put their stop loss here. Why will you buy market for here and put your stop loss here? Why, like, some people don't even know what they are doing. Why will you buy this market and put your stop loss here? You can't buy this market here and put your stop loss here because this is not a valid break of structure. The pullback is not a valid pullback, it's an inducement. Assuming say this price now get down, assuming say this price now sell now from here now and reach here. Sorry. Here now and reach here now and break. This is a valid break of structure because the price get down to 50%. The price gets to our discount zone, so it is valid. But if price couldn't get down to that 50% discount zone, it's not a valid break of structure. It's an inducement. So as price no go down, reach here and break structure, this is not a valid break of structure. It's an inducement. So this is a clear inducement. Clear one. Clear one. I don't need to show you. This is a clear inducement. So this is an endorsement. Here is not a valid break of structure because the price didn't come down to 50% discount zone. So this one now is what we call this one extreme inducement. This is an extreme inducement. EST. Extreme inducement. This is an extreme inducement because when this market was buying, it respected here and break and go high and come down again. Price is usually take out this low. So here's an extreme inducement, and here is the inducement, or here is the extreme one. So they have two type of inducement. They have normal inducement and extreme inducement. So I'm trying to catch this market, or I won't catch this buy like this. So, so I won't catch this buy now from here. So I'll take my fib from this high now. I won't catch this, sorry. So I want to sell the market from here. So I want to take a sell on this chart. I hope you guys understand what I said about the inducement. GPN, Alpha, you sure you understand what I mean by the inducement? Do you understand what I mean on the inducement? Do you understand? Do you understand what I mean on the inducement? Let me know. If you don't understand, let me know. Ask me any question. Anything you don't understand, you just ask me. Ask me anything you don't understand. Ask me. That's why I'm here. GPN. So you guys should ask me a question. You guys ask me a question. Ask me a goddamn question. Ask me a question. Oh, ask me a question. Oh, ask me a question. Is there anyone that doesn't understand how I use that Fibonacci? If you don't understand how I use that Fibonacci, let me know. Anybody that doesn't understand how I use that Fibonacci, just let me know. Keep me updated. Anybody that doesn't understand how I use that Fibonacci, any person let me know so that I'll do it again. You don't understand how I use that Fibonacci? Okay, I will explain it again. You should stay online. Let me explain it again. So, listen to know how I use Fibonacci. Oh. I've already used Fibonacci here now. I don't already use them here. Let me zoom this in. So look at this trade now. Can you see this trade bar? This market break structure here. This one now is for the sell. This is for the sell. This is for the sell. Don't know if you understand my point. This is for the sell. This is for the sell. I'm doing this for the sell now. So there was a break of structure here, and there was a change of character here. Why I put this inducement here is because this market na buying market. So as the market won't buy, it come pull back. So this pullback now no complete. This pullback now no reach this 50% level. So it's an inducement. But as I want to enter it a sell now, it's a change of character. So as it's a sell now, let me just do it the normal way. It's a change of character. This shows you that the price wants to come and demand. This will tell you that the price now want to come and demand. So I'll just remove all this one. So so now we have a break of structure here. This is how to use this Fibonacci. Look, oh my brother. So this is a change of character here, and this is a break of structure. So what will you do? You take your Fibonacci. This Fibonacci, this is my Fibonacci. You take this Fibonacci from this high, not from here. You won't take it from that place, from the low. You will take it from the high, from the break of structure. That's why you take your Fibonacci from the break of structure. Always take a Fibonacci from the break of structure, not from the change of character. So the place that caused this sell, so you know, say the market was buying and change character. So you take it from this place to this down, to the down. Weak, the high and the low. This high and this low. So let me still put this thing here. So you take it from this high and this low, from this high and this low. Let me find a way and edit this my Fibonacci. Just edit them all. So let me put this thing back. This is one. So look at this my Fibonacci. Look at the way look the way it is. So but you don't need to do this. So look at this my Fibonacci now. You take this fee from this high to this low. So the middle one is 50%. I can still let me just reset everything from this Fibonacci. So if I can do that. Let me see if I can reset everything to normal. There's no way to reset this thing, right? You apply default. Good. So this is the default. This is the default Fibonacci. This is the default. So this is on your PC now. This is how your own will show on your PC. This is how it will show, I believe. So as it's showing like this now, you will take this Fibonacci now. Let me start afresh. From this high to this low, right? So mark out the middle box. The middle box is the 50%. The point between 0.5 and 0.6. So you mark it from this middle, from this middle up, not down. From the middle up is your discount area. From this middle up is your discount area. So once price get to this discount area, it should sell. From this middle up is your discount area. Let me do it again. So if I take this fib now, from this high to this low, from this box now up is your discount area. So this is your discount area. So here, these are your discount area. So you want to sell this market from anywhere here, anywhere you see a consideration here, anywhere you see the market trying to supply. That's where you should sell your market. That's where you should take your sell. Hope you understand me, ba? Okay, okay. I will let you know. I will teach you how to identify endorsement. It's not how you use the fib to confirm trend, structure, and mechanism. Good. So this is what I'm explaining now. I want to focus on one first. Let me explain this how I use this Fibonacci now very well. Let me explain this how I use this Fibonacci very well. So I'm trying to show you guys how I use this Fibonacci very well. Who's calling me? So using this Fibonacci now, I want to take from this high after break of structure and change of rata. I want to take my fib from this high to this low. So the middle now is my 50%. Let me just show you guys. Here now is my 50% discount zone. Here now is my 50% discount zone. This middle now is my 50% discount zone. So I want to take a sell from this zone. See? From this zone. See, ba? I want to take my sell from here. This is how I want to take my sell now. But then this from the discount zone. This is how I want to take my sell. But then once I put the Fibonacci and mark out the 50% discount zone, I want to look out for a reason why the market will pass that exact point. I don't know if you understand me, but I want to look out for a reason why the market will pass that exact point. The main reason are number one, inducement. Don't forget that inducements are still the same as liquidity. Inducement is still liquidity, depending on the way you see it on the chart. Inducement is still liquidity. Liquidity is when they are plenty. Inducement is when maybe they are just like two or few, that kind of thing. But they are all the same. So the reason why I want to sell this market now from here now is because there is no liquidity from here to here. Nothing is here. There is no liquidity from here to here, and there is no fair value gap. So there's no fair value gap from here to here. See, there's no fair value gap from here to here, and there is no liquidity from here to here. So if I mark that 50% discount zone, I want to look out for a liquidity from here to that place to the high or a fair value gap. But if I can't see a liquidity or fair value gap, so I will use that 50% zone at that exact point, like at that exact place, which is the middle of here. Or I'll just use the up. See, ba? So I want to use that middle, that point as my entry. That point, and the high, this high now is protected high because the market change character. What's market change character? The high is protected. What the market come down and break out, the low is protected. Why is this thing a change of character? Because the market break structure. So if market break structure, the low is change of character. The low is protected and price came down and take out that low. Okay, so let me show you guys something now. What happened here? You see, say when price come down reach here, you know, green sell, abi, it start to go up because of what? Here is protected. This is a break of structure. This low now is protected. The low strong. Market price shouldn't go below it. So if price go below it, it means say the market don't change trend, it don't change character. Why did the market change trend? It changed trend for you to sell to buy. It changed trend to sell to demand. I don't know if you understand me. So when you see this kind of thing happen, what will you do? You take a Fibonacci from this high to this low. So you mark out your 50% discount zone. See, ba? So I've marked my 50% discount zone now. Then I will look whether there is a liquidity from this place now to here. But there is no liquidity here now. There's no inducement here, and there is no fair value gap here. So I'll take myself from that 50%. I hope you guys understand, ba? So now, looking at this thing now, you will see that where liquidity, where inducement there now is here. This now is an inducement. Do you know why this is an inducement? Because this market now swing high. Is swing high, abi, and sell. So now, people now will think that this is another block. People now want to put their stop loss here. Anyway, stop loss, then I'm inducement. People now go to say, market now done the sell from here. Now it will not go above here, but what price will go above here before you go sell. Price must go above here because it's an inducement. It's a liquidity. So this here now is a liquidity. Here now is here now is the inducement and the liquidity at the same time. Here now is the inducement and the liquidity. So you want to see price, see the 50% here. So once price goes above this inducement, reach the 50% and start to supply, that's when you sell. And make sure that price goes above this inducement with a body. Listen to this thing very well. This one will help you now very, very well. Make sure that price take out inducement with a body. You go ask me now why price has to take out inducement with a body, and I will gladly tell you that why price go take out inducement with a body is to confuse people that doesn't know how to trade. If price go above inducement with a body, people now will think that this market now don change character, e don dey start to dey buy or e don dey start to dey sell. So inducement, market need to take out inducement with a body. Market take out inducement with a body. And anytime market want to take out inducement, it takes out inducement with a body. If you come down take out inducement with a week, it will still go up back that place again to make sure that you take out that inducement with a body. You know why? If you use week to confirm all this structure, you will figure out that week e just like say price no reach there, so body is that price don reach there. So if market come take out inducement with a week, e means that the price hasn't got to that point. Price never reach that point, so e is not a clear inducement sweep. So price takes out inducement with a body, not with a week. Price takes out inducement with a body, not a week. So looking at this chart now, you see that here now is the inducement for the sell now. IBM. So I want to see price take out this inducement with a body before I take my sell. I don't know if you understand, but so there's favor look gap here now. You cannot sell from this favor look gap. You cannot sell from this favor look gap because here is premium. Like this is a premium zone. If you sell from this favor look gap, you go chop loss because here is a premium zone. You don't sell from premium, you sell from discount. So that's how to use Fibonacci. I will still explain them again on my next video. So this is your discount zone. Here is your discount zone. Here is your inducement. If I take my Fibonacci from this high to this low, you see that here is the discount zone and here now is the inducement. So I want to see price take out this inducement with a body before I enter my sell. Don't know if you understand me, but I want to see price take out this inducement with a body before I enter my sell. I believe you guys understand me very well. So anybody that has a question should ask me again. Anybody that has a question should ask me. So if you have a question, you ask me because our next live is on Friday. Our next live is on Friday. I'll make a video on that field very well. I'll make a video on it and send to you guys on the private channel. I'll make a video and I'll explain how to use this feed very well in case this one confuse you guys. I'll explain how to use the feed very well and how to spot out inducement and liquidity, because I figure out this is the major things that people get confused on. Sometimes you use your stop loss and put at the inducement or liquidity, market will come and take you out and start going to the direction. So I will try to make a good video for that standard, So market is still selling down. Market is still selling up. So I still want it to go up. Since market couldn't come up to our destiny and still pushing down. So if the price doesn't get to that place, I'll still sell it. So, well, let's keep on waiting. Let's see what will happen. Let's pull back and about to. So guys, I think I need to end this live now. Our next live will be on Friday. Next live will be on Friday. I might go live tomorrow, so it doesn't actually matter. Anytime I feel like going live, I'll go live. But Monday, Wednesday, Friday is it's kind of a must. So our live is Monday, Friday, Wednesday. But I might still go live tomorrow. If I want to go live tomorrow, I'll still notify you guys. So if you don't understand anything, I don't know. I've explained this how to use this Fibonacci and inducement. I don't know if you guys were here to see that, but I'll still explain that on my next video, my next live. So The market is still dumping. Okay. Please explain how to easily identify break of structure and change of character. I think this will be on my next video, but let me just give you a hint. Let me just give you a hint. Let me just give you a hint. So I've already done this, but I'll still show you. So let me show you what's a break of structure. Depend on the terms. You see, there is so many break of structure. There is so many break of structure. So before you get this break of structure right, you need to use higher time frame to identify the market trend. Once you can identify the market trend, then you should know you should see a break of structure. Sometimes people see a break of structure, but they don't know the reason why the market breaks structure. For example, now let me show you something now. For example, now look at this break of structure now. Look at this break of structure now. Abi, this thing was a break of structure, right? And what? A change of character. You could ask yourself now, why this market now do break of structure? That's the question now. You ask yourself why you do break of structure. That's what you should be bothered about. It's not even about the break of structure. You should be asking yourself why market break structure? Where is the next target? So this market now won't buy. Now the market now won't buy. Now buy he won't buy like the market want to demand. He wants to demand. He just change character, right? And swing low. He was supposed to swing low to demand zone, but he failed and went up and do a break of structure. So he did this break of structure for it to sell to demand. See ba? For it to sell to demand. This is a pullback. This is how market pulls back. So this is a break of structure, and I'll still show you another break of structure. This is still a break of structure. So see a break of structure here. It's very simple. I'm on the chart already, so I'll just show you. So look at this thing very well. So this is a break of structure. Why is this a break of structure? Why is this a break of structure? I will tell you why. I hope you are there. So why this is a break of structure is because if you look at this candle now will go high now, right? Price come down and take out this candle, right? I'll mark all the candles. See this candle now. Price market come out. See this one now. Market still come out. So all the candles that is here, like market come out at least one candle from here. Market come out one candle from here. Once market come out candle from here and swing high to take out this high, it's a break of structure. Look at here very well. Look at here very well. This is still a break of structure. And where is the low? Here is the low. So look at this candle wey go buy now. This candle now go bullish now. This candle come down and take this candle out and still go up and break this high. So this is a break of structure. Once market swing low, take a candle and break that high. It's a break of structure. Market swing low here, take out this candle so they inside here and break out. It's a break of structure. Market come swing low from here. E sell reach here. Take out all these candles. Take out at least take out candles so they here. So once take out, even though na one candle and break the next high, it's a break of structure. So as all these candles dey, na market come swing down now. Take plenty candle out here and still go up again. Take this high. It's a break of structure. Then if you take out this high That means this low now is protected. So this is a break of structure and the low is protected because it swing high, take a candles and go high again. So now in the break of structure, it's very simple. So again, what happened again? It still swing low, Abi. It still swing low. Come reach here. Take out so many candles right here, Abi, and still go above this high. It's a break of structure. So this low is protected. So what happened again? It comes to swing low again from here. It said reach here. Take out all this candle, right? And still go up and go above this place. What does it mean? It's a break of structure. So this place is a change of character. The low now is change of character. The low is protected. If you want to know low where they protected, once market come down to any low, before you go change, you go break them. Or if not change of character, before you go break them, you go respect that place at first, then come break them. So if you look at here now, you see that price respected here. You see am back. It tries to buy. It tries to buy from here, but then the market, the major trend is selling. So the selling is more stronger than the buy. So what happened? He went down and changed character. So to spot break of thought is very easy. It's not even that difficult. So once you see a market swing low and take out candles and swing high again and break that high, it's a break of structure. Then the low that caused that break of structure is the protected low. That low should be your change of character, just like this now, just like this break of structure. Here is the low, right? That caused the break of structure, right? So here is the change of character. Very simple. So if market now they buy now, you shouldn't take out any of these lows. See, but if market they buy, you shouldn't take out all these lows that are marked, all these lows now. One, two. You know, see, okay, just look at this thing very well now. Look at this trend very well now. Look at this market structure. You can see that market couldn't take out any of these lows. You see, but one, two. You see, but as a breakout, come down again, come break out, come down again. Did it reach here? No, break out again. Did it reach here? No, break out again. Did it reach here? No, it break out again. See, ba? What change? As price get to here, what change? It break this low. So you don't change character. So once price swing low and swing high and break out, it's a break of structure. I hope you understand. SP. Olusegun, hope you understand, ba? Okay, I think I've done this before. I've done this GPN. I've done this. I've done this on the first live that I went. I did this, but I think I'll do it again. So on the first, when you get to charts like this now, the moment you get to charts, the moment you just got on the charts, when you got on the charts, the first thing you should look out for, I've explained this before. When you got on the charts, I don't want to click all this thing. I have to open another one. Oh, what am I doing? Mm, so I hope you guys can see me. Hope you can see my screen bar. So let me show you what you do when you get on the chart first. Let me see this market only 50%. It's like not itself. No. You have not got level. So this cell now we are going to take on. We will take this cell. I'm going to take this cell. This cell right now. I will take this cell. So I see that price want to respect it. The price want to go up now. So this cell, I'm going to take this cell. So you guys, let's stay active for this cell. It's going up. So this is what you should do when you get the first thing you should do. I've said it before, like I've did this like several times. If you carry your laptop in that chart, just carry your laptop in that chart. If in that chart like this, what you should do first, this is what you should do first. You should find a break of structure. Okay. No problem. But let me just brief it out. Let me just brief it. So if you got on the chart, if you just get into a chart like this, what you should do first is to find out the break of structure. Confirm the break of structure. That's what you need. If na selling market, you go find the break of structure. Then what I will use another pen. Let me use another pen. Let me use another pen. Let me find a selling pen now. What pen will I use now? Hmm. What pen should I use now? Let me use another pen. Let me find a selling market now. TBP. Which market they sell now? Which market they sell? Forex. What should I use now? I want to look out for a selling market that I will use and show you guys what I'm trying to do. This market has been buying. This one now, Euro. This is Euro USD. Euro USD. So if I get into a chart first, what do I do? I figure out the break of structure. That's the most important thing. I'll go from the back. So looking at this now, this is a break of structure, right? Break of structure. So I want to see price pull back to here. So let me take this thing to this side now. Actually, no good again. What did you see here? Did you see something here? Did you see anything? Price just reach 50%, they can't take a move. See bar? So once you get into chart like this, you should find a valid break of structure. Just that's the first thing you need to figure out a break of structure. So if I even take this side from this to this place, you can see a clear pullback, right? Right? Hope you can see my screen. I want you guys to see this is the last video I will do. So I hope you guys can see my screen, right? So this is how to figure out the breakout. This is how to know the first thing that you need to the first thing you need to do when you get into a chart. So if you got to a chart like this, just mark out the break of structure. Once you mark out the break of structure, you will take your Fibonacci from the low to the high and see if price reach this discount zone. If price reach discount zone, once price reaches discount zone, then it's a break of structure. I don't know if you understand my point, but so this is a break of structure. Price reaches discount zone, right? You mark out another break of structure, right? Here now. Break of structure. Did the price reach discount zone before it go high again? Let's see. See bar, see where price reach bar. So price no pull back to 50% discount zone. So see this, so you have to mark it out. Here is the 50% discount zone now. See bar. So this is not a break of structure. This is not a break of structure. This is not a break of structure. This is an inducement. So people that time ask me wetin be inducement. See inducement here now. See inducement here. Inducement is a Fed pullback. A Fed pullback is an endorsement. A Fed pullback is an endorsement. So here is an endorsement. After this break of structure, you use your fib to take from the low to the high. See to this high. See ba, this low, this pullback didn't get to 50% discount zone. What happened? It went up. After it went up, what happened? It still come down and take out people that where they buy here now. So this is a this is an endorsement. It's quite simple. It's an endorsement. So what happened? Market come make another movement. This is Euro USD. So all this my analysis is on is they are all the same. This in case you want to ask about this strategy, this is SMC, advanced SMC. I don't know, but I think this is an SMC. But I use my I just made my own way of understanding it better. Like I had to make it easier for me with this Fibonacci and all that stuff, you know. So this is what it's an SMC, smart money concept. I think yeah, smart money concept. So this is a valid break of structure here now. The price come down again. Let's check from this high to here. Good. I've seen a good something here now. I've seen good something here now. So if you take this now from this low to this high now, see the 50% level. See the 50% level is here. The 50%. So this is an endorsement. This is an endorsement. So what happened? Price still come down. Sorry, price still come down to take out this endorsement. See where it's supposed to buy. This thing will still come down again. Oh, see where it's supposed to buy. It's supposed to buy from here. Supposed to buy from here, and there's a favor look up here. Supposed to buy from here. So this is an endorsement. Market has taken out endorsement. So looking at this now, it did change of pattern here. It did a change of pattern. There's no change of pattern here, but then so let's call this a change of pattern now, and it wants to supply. So I still want this market to come down to buy from here, to buy from here. Not even from this favor look up, from here, not even from here, from here. So I think Euro USD will be selling, and gold will still be selling at the same time. So these two pairs will be selling. So this is an endorsement. Okay, ask me the endorsement. This is an endorsement. Not write an endorsement here. IBM. This is an endorsement. See where price is supposed to come down to. So I think I'll explain this better on our next video. Only one person is here right now. So I want to see this price change pattern to sell. Let me go to 1 hour now. You can see a clear break of structures, right? If I use 4 hours, use my Fibonacci on this side, this low. Here is the Fibonacci scan, and there's a favor log up here. So I'm going to sell this thing from here. So this pair and gold, they both gonna sell at the same time. I think 1 hour. Probably the point where you go sell. So here is a tuna pattern. See bar, 50% right. So once you know this 50%, you will see how trading will be so easy for you. You not even stress yourself anymore. You didn't even get to this favor log up. You take a move. So you want to see price come down again to this 50% and take another move. See what? Quite simple. But then this market I want to sell it, so it has gotten to this favor log up. So I would like to sell it. So I'll not buy from here. I'll just wait for it to change character like this. Just change character like this. Then I'll use my flip again and drag from this side to the low, and take this side here. See what? And take this side from here. So I don't think that this is hard. This is not hard. It's just, but you just have to understand it very well. You know. So I want to see price. We are this way. You know. Very simple. The thing is that you just need to have patience. Forex money is patience. Everything in the forex market is patient. Once you have patience, price will get to you. You will welcome price. When you realize you are the real money, that's when price will start to respect everything that you do, and price will come to you before you take a move. Okay, it's 1 hour and 40 minutes now, so I'll end this live now. Our next live is going to be tomorrow or on Friday. Let's just say on Friday, but if I see opportunity to go live tomorrow, I'll keep you guys updated. Thank you guys. See you guys on my next live. I think I'm about to end this live now. So ask me questions now, so that I'll keep a record on our next live. Ask me some questions that I need to, explain to you guys on my next live. So my next live, I'm going to focus on break of structure. I'll explain it more. Break of structure more, and how to use this Fibonacci more because it will help you a lot. Break of structure more and how to use Fibonacci more. That's it. Break of structure and use Fibonacci. And again, inducement, how to identify inducement. Break of structure, how to identify inducement, and what again? And how to use this Fibonacci very well. The use of Fib very well. Five endorsement. Okay. On my next video, I'll explain how to use Fibonacci very well and how to identify endorsements and break of structure. So once you can be able to identify break of structure